After hitting overhead resistance, the market decided to come back down a little bit and is currently looking a little bearish. Riz and I are going to talk about what's going to happen next. Good evening, my fellow traders here in Riz Elite and all of our subscribers on YouTube. Welcome to our Elite webinar. Now, if you want to get the most up-to-date information on the market as possible and you want some unbiased opinions, then make sure you smash that like and subscribe button down below. Click the bell icon to get notified every time we upload a new video here on the Riz International channel, because that's exactly what you're going to get with our content. You're going to get unfiltered, unwatered down, non-biased information, because tonight we have the man himself, Riz, with us. Riz, how you doing tonight?
Doing good, Chris. Yourself?
Doing great. Glad to be here. And yeah, the market has been a bit interesting. After, we had this bit of a bounce here last week, we came and ran into our channel line that we had drawn here for months. And this seems to be holding right now as resistance. We did kind of come back in that channel after pushing out of it for a few weeks. And yeah, we kind of ran up into that, and the market sold off. We had some major red days, though. Friday was a little bit of an indecision day, honestly. We kind of pushed up and we came back down before the close, and we're really holding over this 4450 area. Has been just an incredible area of support for the market right now. Riz, it really looks like the market wants to sell, but something just keeps buying back up here around this 4450 level. What is going on? What are you seeing?
Yeah, so we've seen this key level before, even back in June. This kind of level was hit and was potentially previous resistance. Eventually, we did break out back in the start of July. Like you said, it kind of trickled back down below that upward trend, top level of that trend line. And once again, we are back at that area again, that crucial 4450. I mentioned to elite members maybe a few days ago, this past week, that keep an eye on this 4450 level. A strong break below that can signal us to the 4400 support area. And I know some people will be like, Riz, that's not exactly support. The actual candles, go a little bit lower back in July, or I think August, sorry. And yeah, you'd be right, but I don't simply want to hit the bottom there. I think 4400 is that nice multiple touch point support. It's a key level. It's not a whole dollar figure, but that full round number, it matters, believe it or not. And that 4400 is, as Chris has just outlined there for you. So that will be interesting. We could hit 4400 if we do get some bearishness below 4450. Right now, that didn't happen. We did get that Thursday and Friday kind of push up a little bit. Thursday was a bearish day, but it kind of closed higher than it opened. And then Friday, we had eked out a little bit of a positive return. But it was also a short trading week. Volume was, I wouldn't say normal volume, but it wasn't completely dismal either. So this will be the first full week of September. Will this be the full week of September, trading week of September? I think so, yeah.
Should be, yeah.
Yeah, so we are well into the second week of September and really getting to the end of Q3. Unbelievable. So I think the reason being we are at this level, I think this is a kind of an area where the market is in of two minds. It has been of two minds, but over the last couple of months, but especially now, we're kind of late into the year now. We know that inflation numbers are going to be coming. We know that Q3 earnings will be coming at the end of what is it? I think October, November is when we're going to see Q3 numbers, right? So it's going to be interesting how that goes. And I think right now we're kind of in like a wait and see approach. I know I say that sometimes we're like, oh, again, wait and see, again, wait and see. But for those that are in elite, are experienced and have the patience, they know that waiting is a gift. Having the ability to wait and the discipline to wait, and only jumping and pouncing on a trade that is of the highest quality, and when conditions I would say are suitable, is the best way to make it happen. I feel like right now is not that situation. You guys know that once I see an opportunity, I am going to take it, and I'm going to kind of go in a little bit more aggressive than some people might be comfortable with. And we saw that with some of these Chinese. Well, it wasn't a Chinese short, but this VFS specifically was I think it was like a Vietnamese automaker, insanely overdone. But that was a good trade. That was a short. And we did well on that. That's an unbelievable chart. Like I've never seen anything like it. It quite like it. It just wow. Like I just like look at it. I don't even know what to say. It's brutal. I mean, we were able to make money off of it, so that's good. But yeah, we're kind of in a holding formation right now. I do have quite a few positions that are just holding up. Some that obviously we got the pipelines. I won't go into details, but it's for elite members. I know you guys are on here, but I feel like once we get into the end of Q3, I think it's going to start getting more interesting. One thing to note is that September is usually, it's not like an outright bearish month, but usually based on seasonality, it does lean a little bit more bearish than some of the summer months. So just keep that in mind.
Always good to keep an eye on seasonality. And yeah, it's insane that we're almost done with Q3, guys. I feel like we just started the year, but not so much. Not so much, that's for sure. So definitely got a lot of things going on this weekend. We got some big numbers reporting. Of course, we'll talk about that here in just a minute. But let's go ahead and take a look here at the breakdown for the S&P 500 with the different market sectors here. Tech and communications seem to have kind of cooled off a little bit. We're starting to consolidate here, as well as consumer discretionary as well, really kind of flattening out a little bit over the last few weeks. Obviously, we had a big spike in tech and kind of came back down, but we're definitely seeing this flattening off with the market as the market kind of cools off a little bit here. Obviously, we had some downside earlier this week. Energy keeps running up here pretty strong. We talked about this last week that we're seeing a big push in energy, and while the rest of the sectors are really just kind of hanging out right now, right at or below the zero line. Financials, real estate, healthcare, consumer staples, and utilities all currently below the zero line, with utilities being the worst. Riz, what is driving this run up in energy? Obviously, we'll talk about that here when we look at oil in a second, but what is pushing this sector up right now?
Yep, more cuts, more prolonged cuts by OPEC plus. We also know that demand continues to be high. Yeah, the summer season is kind of coming to a close, but global consumer demand for oil continues to remain high. Of course, supply cuts do not help that, right? I feel like we're getting a little bit frothy in oil price. We will, like you said, touch on the price per barrel shortly. But these stocks that represent the XLE energy sector, they're all been running. You can see they were significantly underperforming the year, but now they're kind of coming back up. They've kind of come back alive, and especially the last month and a bit. So not surprising with oil prices also continuing to go up. Another thing that we need to be mindful of is the SPR, Special Petroleum Reserve, in the U.S. has pretty much been emptied out. I wouldn't say emptied out, but it's definitely been drawn down. And that's one of the things that the current Biden administration had done the last, for the predominantly the entire year, to put that pressure on oil prices to go lower, right? And I get why they did that, because oil prices are one of the biggest factors of CPI inflation.
Yep. Yeah, no, obviously they wanted to try and push those numbers down. That would help consumer confidence. But yeah, as you said, oil has been running, and we kind of saw this starting last week where we were butting up to our resistance here, and we really pushed through it this week with oil. Let's see, closing at 87.51 per barrel on Friday, even after a short trading week. So a nice bullish move in oil, to say the least. And gold is pretty well just hanging out here. We really haven't seen too big of a move here after that attempt at the all-time high on gold. We've definitely come back down and really have started consolidating. Nothing too exciting here, but yeah, oil really starting to push here. And with the administration, having released a lot of that strategic oil reserve, or strategic petroleum reserve, whatever you want to call it, definitely helped the CPI. But yeah, now prices are coming back home. So, do you think that this run up in oil is going to, give headaches to the current administration with the CPI, or do you think that we should see better numbers coming up this week?
Absolutely, it's going to give headaches.
Yeah.
Absolutely, it's a great question. And I've been calling for uh the I don't want to say I've been calling for, but I mean like I've been kind of hinting at the fact that the next CPI numbers released could actually be higher, meaning inflation from a month to month standpoint could be higher, and inflation from the annualized perspective as well could actually be up compared to the previous month. Why? Oil prices at the pump, gas prices at the pump, I should say. We saw that back in Canada last month. To refresh anyone's memory, we had, I think, in July, we had inflation annualized come down to 2.8%. And then in August numbers went back up to about 3.2. That's a big move up. And after we looked at it in detail, what was the key, I would say, differentiator between inflation being 2.8% annualized versus 3.2? Gas prices. So if Canada is any measure, and I think, the numbers are relatively calculated similarly. Obviously, we look at the similar data for each country respectively. I do think there's a chance that we see a little bit of some upwards pressure on inflation. So inflation isn't completely down and out. Don't count it out. It's not one of those things that, okay, we solved inflation. No, I think right now it's still a little bit elevated. It's definitely better than what it was, last year, 9%, 8%. That was unsustainable. That's how empires crumble. So it was important to get it down. But it's still above the Fed's mandate of what is it? I
2%.
think yeah, 2%. 2%. And people were speculating that, Powell and the gang would maybe change their target to being a 3%, but they haven't yet. And I don't think they will. I think they've signaled many times in different speeches, conferences that, look, they're targeting 2% still. I think they feel like that's where the US needs to be, and that's a healthy level. And I would agree with that we do need to see 2%. We've already had inflation be running hot for over a year. It's just not sustainable to have it at 3% or higher, because that erodes people's wealth, that erodes the value of money. And as we know, inflation is one of the biggest detriments to society and the global, not the global economy, but the economy of the country, and the longevity of the country as a whole. So once inflation goes out of control, monetary policy gets out of whack, currency valuations go crazy. It's a nuisance. It's like there's plenty of examples, current world examples right now. We got Venezuela, you got Turkey as well. Again, Turkey is still relatively controlled. I mean, controlled in a sense that society is still functional. You know, depending on who you ask, is subjective. But it's things are going on. But you look at Venezuela, you look at other countries where it's just absurd. It's really all economic activity is halted, and that's a disaster. So definitely why people are like, well, Riz, uh, they're gonna kill the economy, they're gonna kill spending just so they can bring inflation down. Yeah, they have to. They have no choice. They gave too much money for free for too long. You cannot buy things on borrowed money perpetually forever. As much as people may think the last 10 years, I think everyone um, who's been looking at the last 10 years is spoiled in thinking that that's the norm. It's not the norm. The way the last 10, 15 years, even after 2008, the monetary policy completely turned upside down. It's like what we refer to as modern monetary theory, where massive amounts of debt, massive amounts of money printing, massive amounts of stimulus, all at next to no interest rates, nearly 0% real rates. That's not sustainable.
Well, they say you can't spend yourself out of debt, but I do know one place where inflation is fantastic, and that's on the like and subscribe button. Make sure you hit that for us. would really help the channel grow if you want more content like this. But yeah, I mean, obviously they had to try and get that CPI number down, and releasing some of the strategic reserve was one way to do that. I have heard that they are starting to refill that strategic reserve, but yeah, they're paying a premium for it right now, to say the least.
Yeah, there's
Let's,
conflicted
yeah,
conflicting
yeah.
information. Maybe they've added a little bit, but it's not enough. They
Oh
cannot
yeah,
do
it's
it
a small
at the
amount.
level they want. You know why? Because if we're seeing oil at what, 87, Chris, I think,
Yeah,
they
87.51.
if they really need to fill that puppy up, well, they're gonna have to
That's way
buy a
too
lot
much.
more. And guess what's gonna happen?
Going
It's
to push
gonna
inflation
boost.
even higher.
Yes, so they're in a pickle. And I had mentioned this back when the Biden administration had started, using the SPR, and then we talked about this, Chris. I know I can recall
I remember.
during the summer, and we're like, look, I get why they're doing it, but wouldn't it be a fantastic trade if they released all this oil and sold it into the market at, let's say, like 80, 75, and then we're able to buy it. I know they had a target of wanting to buy it back around the 60, 65. You can
Mm.
see by the chart, we didn't exactly get to their 60 area. We were very close to 65, but we didn't get to that $60 mark where they wanted to refill. So it goes to show you, even the bigwigs in the government, obviously, or in really any government institution, aren't all that smart, and are pretty inept and incompetent. So this is classical 101. We see this where they drained the SPR. They could have started scaling in. They could have hedged and gotten in. It would have been a great trade if you really think about it.
Yeah, it
Sell
would
high,
have.
buy low, right? Sell high, buy low, and then uh, nope, here we are, 87.
Yeah, I guess goes to show you even the administration gets it wrong every once in a while. Let's go ahead and take a look here at the bond yields and the dollar. So bond yields continue riding high, especially here on the short-term 2-year bonds. Let's see, where did we close on Friday? Just under 5%, returned on those bond yields. So that's pretty good for a 2-year bond. For the longer term, for the 10 and the 30, it looks like we closed right around at about 4.25 and about 4.33, respectively, for the 10 and 30 years. And the dollar just keeps running hot lately. After this big dip here in the middle of July, we have seen nothing but blue skies for the dollar, looking very strong right now, making a big push up here. Riz, what are you seeing here in these two areas? What are your thoughts?
Yeah, so this is interesting. The dollar continues to be strong. Again, the DXY index is the index for the US dollar compared to major currencies, global currencies, not just one single currency. But when you see the green line go up, simple, US dollar gets stronger. Okay, so a nice turn of events from that 100 level. I feel like this can continue. I think the US dollar has legs. If we continue to see global economies get worse, we've seen Chinese economies slow down, right? They're obviously fudging their numbers, and they always have. They will continue to. So even if they tell me, if the CPP or CCP is like, oh, our GDP numbers are 5%, I would say it's like 1%, not even, like, you know what I mean? They always do this, and it's anyone's guess as to what it really is, but I can sure as hell assure you it's not what they say it is. And the same applies for Russia and stuff like that too. But that's another story. Ultimately, we do know that there is weakness in the one of the largest economies in the world, China, right? We also know there's a few other countries that are already in a technical recession. They have been, Germany, Netherlands. I can't come out and say that China is in a recession because, like I said, their GDP, according to them, is positive. Wink, wink, right? So just based on the data, I can't say it's they're in a recession, but we do know they're in massive economic slowdown. We see, their system has slowed down to the extent they've had to like literally start pumping money into the system, cutting capital gains taxes, buying stocks. They've literally allegedly gone as far as to go in and use their treasury money to go and buy stocks to, prop up stock prices. We do know property developers over there have gone under, Evergrande and stuff like that. So this all plays into the US dollar, right? This all plays into the safety net that is the US dollar. So yeah, maybe there's other countries like other BRICS countries and countries that are joining the BRICS that are maybe going to be less reliant on the US dollar. But guess what? if they want to buy anything from the US, and if the US ever wants to buy anything from them, the transaction is going to be done in US dollars, period. So it blows my mind when I see it. And again, we're going back to simpletons and morons online. Um, but it blows my mind. Like, yeah, people always look in absolutes. Oh, look, the BRICS countries, you got Brazil, India, Russia, and all these, and Saudi Arabia is going to join.
South
All the other countries
Africa.
are going to join. Yeah, they say, okay, they're going to not use the US dollar. They're going to use their own currencies. Okay, fine, but you want to do something with the US, you're using the US dollar. You're not using the Canadian dollar for that. You're not using the Indian rupee. You're not using Russian rubles for it, which is absolutely worthless, by the way. So, like, it's one of those things I have to laugh about and just kind of like turn my phone off, because you cannot preach to the choir. And I feel like the data is cognizant of that. We can see the US dollar actually getting stronger compared to many broader currencies, whether it's the GBP, the Canadian dollar, whether it's um, the yen, the yuan, whatever everything. It's crazy how the narrative says one thing and social media says another, and then the actual data says something completely else. So this is good. I think the longer rates stay up, the more upward pressure you have in the US dollar strength, especially so if other countries start cutting rates. So
When
something
you're talking about the GDP numbers coming out of China, I just want to ask the chat here: have you guys ever seen the movie American Pie?
I
I
have
know
never.
Riz is thinking, where in the world is Chris going with this? Well, they talked about in the movie the rule of three. So to keep it PG-13 here, and that movie was not PG-13, by the way. Basically, what I'm going to say is like whenever you get an economic number from one of these countries that's known to be somewhat, let's just say, disingenuous, go ahead and divide that number by three, and you're probably closer to the real number.
That's actually a great tidbit for a lot of things in life, actually.
Yeah.
Um, if someone purposely tells you some boisterous number, just divided by three.
Yep. Usually that's the case. People
Yeah.
always like to say it's bigger than what it really is. There's another
Exactly.
wink, wink, nudge, nudge moment for you. All right, let's talk about the economic dates. And just a little tidbit, we found this out here. The Trading View actually has the major economic dates here on the main panel here. So if you guys use Trading View like you do, you have access to this too. But yeah, looks like we've got some big numbers coming in this week. On Wednesday, we've got inflation time. So that is going to be a huge catalyst for the market on Wednesday. And if you ask me, I suspect the market's going to be in a kind of wait and see mentality going into Wednesday. So if we don't see a whole lot of action on Tuesday, I wouldn't be too surprised about that. Let's see here. Thursday, we got the PPI numbers and retail sales. That should be interesting. And then, yeah, Michigan's consumer sentiment. That's not going to move the market. But yeah, Wednesday and Thursday are going to be the big number days this week for the market. And yeah, this should be an interesting one, especially this core inflation rate. If what we're talking about with oil prices and the strategic oil reserve are accurate, we could see a bit of a move up in inflation. Now they're saying that it's going to be less. That feels somewhat well, what's the word I'm looking for here? Hopeful, if you ask me,
Yeah,
but we'll see. We'll see what they say.
yeah.
Riz, what are your thoughts?
Core is a little bit, so the core, the CPI inflation rate, which TradingView doesn't mention CPI, but inflation rate year over year and month over month. That's the main one we look at, and then core essentially like plus or minus is a few different categories, right? So that's why we see core actually a little bit higher. The Federal Reserve actually looks at core closely as well, because some of the categories that are removed or added into core, they find to be a little bit more representative of actual inflation, so to speak. So that's why you have that little spread there between core and actual CPI, which is the inflation rate. So the year over year 3.6 is what's forecasted. It's going to be interesting. Like we know it was 3.2, and even the market is forecasting 3.6. I had said, just earlier, I wouldn't be surprised if it's higher than the previous annualized number, and markets expecting that too. Now, the question here is, will will it actually come in at the expectation or higher? If it comes in higher than expected, that is going to be a gut punch to the market, because that's going to signal to the market that, and the Fed, that whoa, inflation is stickier than thought. It's just still, higher than expected. Obviously, we know that 2% is what they're targeting, and that means they might need to do another rate hike. And obviously, the market's not going to like that. So if inflation does come in ahead of projected forecast, oh boy, September 20th decision might be up for grabs for another 25 basis point hike. So let's see.
Yeah, that should be really interesting to watch. For all of our members here live, if you have a question, go ahead and start posting that in the chat. But yeah, definitely these numbers are going to be very important. And yeah, keep an eye next week, or rather the week after next on the 20th, we got interest rate day. So that will be a big day too. And I think, Riz, I think you're definitely onto it. If this forecast is lower than what actually happens, if it's higher than 3.6, yeah, I think it's going to be a red day. That's just my opinion, but we'll have to wait and see because we can't predict the future here. We do the best we can to give you our best estimations, but if anyone tells you they know exactly what's going to happen, you can divide it more than three times. I'll tell you that much. So, all right, we'll let our members who are here live in Elite go ahead and type their questions in. But Riz, what are some things that you're watching this week? While our members put their questions in, what are some things that are on your radar that you're going to be keeping an eye on?
I'm going to be keeping an eye mostly, obviously, on the broader market, of course, but also what's interesting is Apple. We were talking about China earlier. Apple is interesting because of the news out of China that they are essentially quote unquote banning
Heard about
iPhone
this.
use from their like actual government employees. So if that's the case, there's actually I think, don't quote me on the exact number, but I read maybe like 20 million government employees or something in
Hmm.
China, which is like that's like half of Canada's population, to give you some context. Like imagine if 20 million people that were previously, potentially, assuming all of them were using an iPhone, that's okay. Let's just make it more realistic. Let's say there are 20 million employees, government employees. Now the iPhone is banned from, government employees are banned from using it. What if 10 million were using iPhones, half of them? That's now 10 million less potential iPhone customers and potential iPhone new purchases if they were going to upgrade. 10 million, that's big. So not only because of that, plus the fact that usually when a government like this clamps down, remember, we know up until recently all iPhones were manufactured in China. Like you know what I mean? Like it's like what? It's like a WTF moment. It's like what? You're literally building them there and you're now banning this actual product that's literally manufactured, assembled in
In
your
your
country,
country. Yep.
right? And obviously Apple has been diversifying out the production ever since 2021, 2020. So maybe this is China's retaliatory kind of answer towards them shifting production out. You know what I mean? Maybe, there's definitely all these kind of mind games and I would say corporate jousting going on. I feel like that's very indicative of why Apple's price literally tanked. Like we don't see sub 4% intraday drops on Apple day. It's not common. Like yeah, we saw it back in August, I think, or July was it, as well, but it's actually not common, right? Uh, Apple dropping 4% has a significant impact on the market. So it's not uncommon to think that, okay, well, if Apple is down 3%, 2% a day, it's going to significantly impact the market as well. And that's what it did. So that's just a little bit of context on Apple. Doesn't mean I'm going out and buying it yet at these levels. But I figured I'd bring that to people's attention, especially considering we mentioned China earlier.
No, a really good thing to look at. All right. I got a question here from Jeff. He says, looks like it's at an interesting level for long. He's cautious due to the backdrop in the housing. All right, let's take a look at O. Realty Income Corporation. I guess we've looked at this before because I've got some lines on it.
Yeah.
Yeah, I mean, from a technical standpoint, it looks like a great place to potentially get in. But yeah, with everything going on in the housing market right now, it is a little tricky. From what I understand, less people are buying right now because, well, interest rates are so freaking high. They can't afford a mortgage. I know. I think we were talking about this last week that I would love to, be able to sell my house and get a new mortgage. But yeah, there's no way in the world I would get a rate like I have now. So yeah, it is a little tricky, for this one. Riz, what are your thoughts? Would you take it long here?
Yeah, this is actually something that's on my radar the last couple of weeks. It's been kind of literally fading lower and lower, and I'm glad you already had that line there at the 55 area support. They just also had their dividend given out. You can also see RSI is completely oversold, just ticked up a little bit from it, but definitely, Jeff, this is definitely a potential long. Just have to be careful in the broader sense of the sector. We know this is a real estate company. Obviously, it's solid, but this drop is not necessarily unwarranted. The market knows commercial real estate is a bit hairy. Not all commercial real estate is bad, but it's just essentially trying to discount some of the exposure that realty income and obviously other REITs have to commercial. I know realty income does have obviously some commercial exposure. I haven't looked too much into detail in their portfolio, but it's not surprising that this has kind of trickled down and frankly speaking underperformed the market this year. Right. If you think about it, it's actually a negative return year to date compared to the market, which is up about 14%. So this is definitely a laggard and definitely also falls into the real estate sector, which we know has underperformed as a whole, right? As Chris has just shown you here, negative 1% as a whole for the sector year to date compared to nearly 16% for SPY. So all things considered, from a pure technical standpoint, even fundamentally, it's a good company. Definitely, consider a long position for maybe even a starter. I would not feel comfortable going all in or like a full position just yet.
Yeah, I mean, you can always hold it for that dividend check every month. Just kind of compound that growth in your account. That is one thing you can do, but of course, you don't want to hold on to a boat anchor forever either. Jeff says he's also considering SPY or SPX puts for the PPI hedge going into the inflation release. Let's just go back to SPX here because that's what we usually look at. So, yeah, I mean, I would say if you have the money and you don't mind that potentially going to zero, it's something that you could do as a hedge. If you expect the market to go lower, or if you think that the inflation rate is going to be higher than what they're anticipating, I think you definitely see some downside in the market for that. But Riz, is this something you're considering doing?
Yeah, hedging is definitely great. I've been considering it, especially as we get into the CPI numbers. I held off because usually if I want to hedge, I want to go long options because it really gives you that leverage and it defines my risk. Like I know how much I'm going to lose, if the trade goes against me. So keep in mind, Jeff, and anyone else watching, SPX is the index, right? If you want to do options on something, you would want to do it on SPY, or maybe you want to do it on if you really, really want that YOLO kind of hedge, you could consider one of the leveraged bullish or bearish ETFs, depending on how you want to structure it, right? The SPXL could be SPXS, depending on how you want to structure it. If you want to just buy one of these, you can do that too. Keep in mind there is decay involved, but the SPX, remember, is the index, so you don't want to just buy options on the index. You might want to do it on SPY, which is the ETF for that.
Yes, always the classic extra small and extra large. You gotta love that. Of course, it's actually just SPX short, but I prefer calling it extra small. But no, it's always a pleasure, Jeff. Thank you for your fantastic questions as always. I'm not seeing anything else come in. Riz, what are your thoughts here? Closing out quarter 3 here in just a couple weeks. What are you kind of looking towards for Q4? Do you expect more downside in the market, or do you think that we'll kind of rebound off of this and start making higher highs again and start pushing towards that all-time high? Of course, I don't think we're going to get there by the end of the year unless something crazy happens. But kind of what are your thoughts for Q4 and for closing out the webinar today?
I've been Definitely, without a doubt, leaning neutral bearish. I'm not completely bearish, like, oh my God, the market's going to go back to previous lows of like 3,600 or anything. But I do think there's more downside than upside. I have definitely been leaning a little bit more bearish, and for a few months. And yeah, the markets continue to chug along. I've done well so far, but I haven't been buying every single dip. I haven't been chasing this rally either. And just by extension of that, I do definitely feel like there's a little bit more downside. I can be wrong. Of course, we know the market is forward looking and it's not exactly directly joined to the hip of the economy, right? As we know. And I feel like just this setup here, the way it looks, um, it's not the most confidence inspiring setup on the technicals, right? As we see the drop off the 4,600 recent high. Um, so interesting times. I feel like we're really getting into from a baseball reference. I'm not a big baseball person, but I'm sure many have heard the reference where, we're getting to the final innings, right? Where I think the closer we get to the end of the year and the start of 2024, uh, the more I think volatility we're going to see, the more economic fiscal risk that we're going to start seeing come up. And we also cannot forget, I know we don't want to focus on politics here, but we do know that 2024 is an election year. We do know from a statistical standpoint, election years usually, if I'm not mistaken, are bullish. Obviously, past, history isn't going to define the future, but if we just look at past occurrences, they are bullish. But I'm willing to say that I don't think any administration is going to be able to control the narrative on a weakening economy. They're not going to be able to control the affordability crisis that has been going on, that I see from my eyes directly, and from people that speak to me, share their stories, share their experiences. I see and hear that directly of their plight, of their challenges and difficulties, not only in the US, but in Canada, even in certain areas of Europe, right? It's gotten very difficult. It's gotten very challenging. It has been, but it's only gotten worse. So it's kind of like being in between a rock and a hard place for the vast majority of people, where you've had crippling inflation, where, pricing has gone up way more, and certain things have gone up more than the other. We had massive supply issues for many of the products that people use, whether it was electronics, whether it was cars, and then you top that up with, massive amounts of immigration and lack of housing supply, a lot of bureaucracy, red tape, and this applies to Canada predominantly, but also other states in the U.S. More so, more or less. I feel like this is a rampant problem, and this is coming to a head. This is coming to a point where people are sick and tired. It's not full-blown financial crisis, 2008, 2009 levels, don't get me wrong, but it's definitely not normal. It isn't like a regular election year, 2024, assuming we get there without any major negative effects. I feel like it's going to be one of those times where we're maybe on the cusp of a recession, which isn't a bad thing so long as it's manageable. The issue is we have major systemic problems with the economy in the West, Western economy as a whole. And we really saw after 2020, 2021, the crazy amount of loose monetary policy in that pretty much every country, especially every Western country, enacted, whether it's Canada, US, European countries. We could see the fallbacks of that now. The price is being paid now. And who is it being paid by? The average person, right? So it's very disheartening. It's troubling. Again, I'm not doom and gloom. I'm not trying to stoke fear, but it is bad out there. It's getting bad. I feel like a lot of it's like kind of like suppressed. It isn't, I would say, front and center just yet. But if you look a little bit closely, lift the cover up a little bit, you're gonna see homelessness is up. You're gonna see there's this discontent among the populace. You're gonna see major issues politically, uh, economically, that are effectively there that people are not happy with at all. And I think you can't get away with that forever.
Sooner or later, the cows are going to come home, and they may come home sooner than you like. So definitely something to keep an eye on as we move forward into the end of the year. Of course, as always, have a great rest of your weekend. Stay safe. Don't do anything I wouldn't do. And we'll see you in the market on Monday.